The market usually rises after the midterms. Will this time be different? With worries about the economy rising, the 4-year presidential cycle for stocks may not follow the established pattern. In today's video, let's analyze how our economy, especially the stock market, will react after the midterm elections. The midterm elections are less than 10 days away, and the prospects for Democrats to hold on to their majorities in Congress are slim. The Democrats have a 5-seat majority in the House of Representatives, and the Senate is split 50-50. In the upcoming midterms, 35 Senate seats are up for election, 21 currently held by Republicans and 14 by Democrats. All 435 House seats are up for election, and the reapportionment and redistricting process following the 2020 census should favor the Republicans. Not only do the Democrats hold only a razor-thin majority in Congress, but also history is not on their side. The president's party has lost House seats in 17 of 19 midterm elections since World War II, and Senate seats in 13 of 19, with an average seat loss of 27 seats in the House and 3 to 4 seats in the Senate. Additionally, midterms are often a referendum on the current administration, and the president's approval ratings are low. Therefore, divided government seems to be the most likely outcome. This is every midterm election since the 1930s. The party who's in power usually loses seats in the House of Representatives. Here's how our past president's party have performed during the midterm elections. George W. Bush lost 30 seats in the House. Barack Obama lost 63 seats during his first term. He lost 13 seats in his second term. Donald Trump lost 40 seats. In the Senate, of course, there are only 100 seats, so the numbers are going to be smaller compared to the House. Bush lost 6 seats, Obama lost 6 seats out of 9 seats, Trump pulled it off with +2 in 2018. The reason why this happens is the question that's been asked for decades, and we still don't fully understand why this happens. But it is what it is. Here's the current predictions. Analysts are predicting that Republicans have an 82% chance of taking control of the House. The analysts expect that the Senate's going to be a neck-and-neck tight race. Predictions are a 52% chance that Democrats retain control of the Senate, which means that the Republicans have a 48% shot. Let's see what's going to happen during the midterm. Here's the important thing: there's a relationship between the midterm elections and the stock market. The correlation between stock market performance and midterm elections is well documented. In 17 of the 19 midterms since 1946, the market performed better in the 6 months following an election than it did in the 6 months leading up to it. Usually, the stock market gains 18.6% 12 months after the midterm elections, which is really good. In comparison, all the other years, the stock market averages a gain of 10.6% in the same time frame. So there's a clear difference after the midterm elections. This year's market performance has already diverged significantly from the average midterm election year. But why? There's no certain answer, and it could be even a series of coincidences, though there are plenty of explanations. The one I prefer is that presidents are politicians who try to stimulate the economy and indirectly bolster stocks for maximum effect in presidential elections. The first couple of years in office is the best time to make politically painful moves, which often lead to weak markets by the time the midterms come around. After losses in the midterms, though, presidents try to give the economy a surge through expansionary fiscal and monetary policy, setting themselves or their successors up well for the election. Will history repeat? Will the midterm elections be a positive catalyst for the stock market? We need to wait and watch. My prediction is there's going to be even more pain as the Fed is ramping up the quantitative tightening, and after that, the Fed will pivot, which will skyrocket the stock market. Also, the variables are different this midterm election. So we're in a recession, or we're entering a recession, along with our inflation is at a 40-year high, combined with a monetary tightening cycle. This time it might be different. But history might repeat this time as well. The stock market might end up higher 12 months from now. We're in October 2022. 12 months from now is October 2023. So it's possible that within the next 12 months, the stock market crashes, and then the Federal Reserve does their pivot, and then the stock market skyrockets. We might have some extreme volatility in the next 12 months. Please watch out. We might even have a repeat of 2020 where we had a crash and the Fed printed trillions of dollars and stock market skyrocketed. We might have the same pattern over the next 12 months. I'll keep you updated. Please don't forget to subscribe, and thanks for watching. Until next time.